Okay, hi there, guys. Hope we're well. G'day, Pete. G'day, Darren. Hope you're ready for tomorrow night, Pete. Anyone that doesn't know, I'm heading off to Adelaide to do an ATAA presentation tomorrow night. Still got to get myself together with the extra PowerPoint. So, g'day, Henry. Sorry about yesterday too, by the way. Had to delay it. We're actually out. Just took the family away for a few days. So it left on Friday. Well, probably midday Friday. Went out to a nice little campsite down in, anyone doesn't know Victoria, Lake Eildon. And then just kicked back. The kids loved it. It was good just getting out and about. Did some fishing, but we cheated. We went to a fish farm. All right. Let's just see if I'm coming through loud and clear. Just let me know if you can hear me all. Oh, good tomorrow. Yeah, we good. We did, Pete. Still waiting for. I'm just watching my stream. The numbers are really low. It's just typical. David, get mate. Oh, good. Well, let's just get up and running. We'll probably a few more floating in soon. Now, thanks very much for joining me. Welcome to Trade Setup. What are we? The live stream for the 16th of April. So ticking along nicely. Market's up today, which is good. It looks like it's a never-ending rally in the US, even though they went a bit flat yesterday, slightly down overnight. Sorry, not yesterday, overnight, but they've been ticking along nicely. I think bank earnings have started. They had, I can't remember who it was the other day, on Friday night, which did okay. JP Morgan, I think, and then last night had Citigroup and Goldman. So JP beat estimates, but the two last night come a bit under estimates or consensus estimates anyway. So a bit of a mixed bag. I think the traders are focused on that. But the key thing, well, there's a few headwinds we're trying to work through. Obviously, you've still got China and the US trade war, but that's looking more and more likely that they're at least going in the right direction. I think that's supportive of the market. That's if they just keep chugging away. It's going to take some time to play out what they come up with. And then Trump is also picking battles with Europe that look like they're, something's going to happen there. They're ready to negotiate on, well, I don't know what it was, the tariffs over in Europe. So, and what else? What other news? It's keeping the markets down. Global growth problems. So it looks like there's been some numbers come out, especially of China, which supported the market. Come out over the weekend. That supported the market, which was quite good. So better than expected numbers. So I think they'll be looking towards this week. You've got retail sales out in the US, which they'll be looking towards that to see how those figures are going. Trade balance data, jobs come out up, I think, on Friday on US payroll. So some of the data come out is not quite as bad as what they're expecting. So they're potentially expecting the slowdown to be easing, or the global economic slowdown to be easing, which is a good sign, which could, if all goes well, could be nice and supportive of the market. But we'll see. This is all speculation because I'm not a economist at all. So we'll go to the charts, something that I know a bit better. Let me just transition it. There we go. So we'll start with the US. Well, it's not the US, the Dow. So you can see the Dow's ticking along nicely there. It's still, just minimize that. Can you see that clearly? So with the Dow heading higher, it's still coming into this resistance zone around that 27,000. I would expect that to be tagged. So I think if something's going to happen, I'd expect that level that they're gunning for, that 27,000 zone. It's spent, actually, let's just draw that up. I'll put it over here. And that's not what I want. I want that. There you go. So this is the Dow here. the beauty of the Dow, well, what's happening, it's still bullish. There's nothing since, here, this bounce end of December. It's holding high lows. You got one here, you got high lows in here, high levels here, little consolidation, high low in here. We had a decent enough pullback, but it really didn't take it any key level. And then it's got an inside high level, high low again. So it's just holding the bullish sentiment. And the fact that the market's traded up through quite a few levels. So you can see this level, I don't really take notice of that too much. Even this level through here at 26,000, the market's pressed up through 26, touched on say 26,250, I think. I haven't quite taken that. Then backed off, but consolidating. So this type of action is really positive, I think, as it's just sitting on top of the MAs, sitting on top of the MAs and the daily as well, and then starting to press higher. So I would suggest that they're going to gun for a push up through the highs. And then the US is notorious for that. They'll punch through the highs, trap all these long positions, as in buyers, who potentially have just missed it out there and just keep watching it, thinking it's overstretched. And you can think that the market is overstretched all you want, but if it's not going to pull back, it's not going to pull back. So if you want to make, sounds bad, but if you want to make money, you've got to be in the market, not just keep watching the market. I mean, we were, I think back, if anyone's following us from TradeSetup, we were looking at it, probably not on, but on the ASX, way back here somewhere. So if it gets through a certain level, we've got to be in, because if it gets through that level, our bias down has changed. It's got to go bias up. So if you bias up the market, you should be entering into stocks, knowing levels where it could be pushing to. G'day, Lauren. You haven't missed much, mate. Just me yabbering on. This is the first chart we've just got into at the moment, so on the Dow. So if you're going to go biased up, plan ahead. We'll look at I'll show you a bit more just on the ASX in a second what we're looking at. You've got to have your targets. What happens if we get to here? And what am I going to do? Am I going to ease out? Have I got some solid positions? You got to remember high probability setups you're looking for. If you look at high probability setups, the market can pull back. Your setups can go sideways, or your stocks can go sideways, and then up she goes again. The market starts, being bullish. You can get some really good setups. Just keep kicking on. So as long as you're sticking to your high probability setups, if you're uncertain, but I think there's a time and when the market's it's gone into free fall mode, which it did through December to the end of December, just after Christmas, I think, before it bounced. It was just free fall, and that was scaring people. And of course, it was all in the news. So that was just that fear-driven sell-off. Probably went a bit further, maybe on a light market. But when it started to bounce, it really hasn't looked back. And I thought the way it bounced, that V shape, has caught a lot of people off guard who started having to chase it up here. If you picked the bottom, great. Good on you. That was great. But if you didn't, you had to have some sort of plan of attack where you're going to go into the market and pick out some nice, like I said, high probability setups to be part of the action. Now up here, look, in all honesty, it's still looking a bit heavy. But then again, anything that's getting sold off is getting soaked up. You can see we're not really getting that much pressure from the sellers. The pressure of the market really lower, and it's getting soaked up at higher levels, like we said, here. So that US, for me, is very much bullish. The fact that we traded into that zone, pulled back, and we're holding another high low into that zone again before we broke it, and we're just consolidating around 26,250 at the moment, for me, suggests that we're going to punch through. I mean, it's only 500 or 600 points away from highs on the Dow, but they can do that in 1 or 2 nights, could easily punch through there. And then it'd be interesting to see what happens, whether it is like we just continue on up, or the market is a bit more constructive. It might punch through, pull back, and if it starts to hold another high low, then you're looking for new highs again. If it doesn't, and the way it comes off the highs, if it comes off savagely off, this is all in anticipation that it does break those highs. If it breaks the highs, so what that, and then we get this big sell-off, and then market edging up, then I'll be a bit more concerned that we're going to have a bigger sell-off if we see something like this. But if we just go sort of the reverse, gradually push down, that's a bit more bullish. So this scenario is more of buyers soaking up the selling pressure, whereas this is a lack of buyers altogether. And then some bargain hunters jump in, and the selling pressure starts to come back into the market. And that's really not what you want to see if you're a bull. So that's what I'd be looking for. I don't anticipate this market is going to break up and through and just go straight through. It could have a bit of a run on, depending on how excited the market gets. But that's all anticipation. We don't roll over. thing is, if we do start holding it here and just grinding sideways as company reporting or earnings over in the US, grind sideways and start trading down through 26,000, then you just have to keep an eye on to see what happens from there. But all in all, that market's still well and truly bullish. S&P, same scenario. We've got a higher low in here and the 28 after a higher low just above 2,700. That's still pressing high. Same sort of scenario. It got through, this is the broader market, don't forget. We got through that level around, say, 28 to these previous highs, 28.25. And it really didn't look back. It pressed up, had a pullback, consolidated, up she goes again. So we're not far off the highs. We're the highs at around 29.40. We closed at 29.05. So I mean, you could do that in a couple of nights again. This market just keep plowing through. This looks a bit more constructive, the way it's edging higher, had a nice controlled pullback, edging higher, bouncing off the MAs. That's a lot better than, say, the Dow looks like it's potentially getting a bit heavy. But we'll see. Again, it's hardest, I mean, it's the easiest thing to do is try to pick a top. But when you're wrong, you're going to be left holding the bag and just, making no profits is what what it's all about anyway. So if you're not in the market, then I guess good luck, but don't like to say that. But otherwise, just looking for a pullback and looking for a really tight risk. If you're entering new positions up here, especially in the US, if you trade the US, I know Laurent does and a few others, I'll just be running tight stops up here because look, it is stretched, but it doesn't mean it can't stay stretched and keep chugging higher. But if you do get stopped out, and again, you're going to be putting your stops under the high lows and a trending stock that's trending up, potentially on the weekly and the daily. So the weight of the move is up. You're putting yourself on the right side of the ledger, on the right side of the market, buying into a strong moving stock, but just remembering that things are potentially stretched here. And if this does get a savage sell-off, like, I mean, a lot of people are talking about, a lot of the bears, then you do not want to have high risk. You don't want to have a big risk on that trade, very wide stop on that. If you do run stops, I mean, if you don't run stops, I'll be, if there is going to be a pullback, you just want to make sure you know exactly what you're going to do. If there is, not saying there is, that's just trying to cover all bases here. Let's get the DAX. DAX is still heading high, not much to talk about there, still going well. FTSE, same, holding higher levels, pressing up from here. Still doing quite well. There's nothing really changed in here. If we go back to the weekly chart on that, yeah, it's getting a bit ahead of itself just up here, potentially, but there's no reason why it can't just plug higher, pull back to the, the moving averages, say on the weekly, maybe 72 or 73, deep enough correction and starting to head higher again. They still got their Brexit problems to sort out. So now we'll go over to, we'll have a look at the ASX. I just want to run over that a bit more in depth. I think a while ago we sent out an alert, so I've turned pretty much more bullish than anything else, and it's the way you've got to take note of the price action and the way it plays out. Now, we've spoken about this a few times. The market, for a good part of what have we got, mid-June till in those 2.5 months or so, it was just popping up, and it was just a really grind of a market back in end of last year. Yeah, it was end of last year, wasn't it? End of last year. It was really grindy when it sort of pressed up, consolidated, another higher high, but didn't really take out the prior highs a lot before it pulled back. So it only took it out mildly, pulled back into that range, set a higher lows, and kept chugging away. It was nice trading there if you pick some really good stocks, because that was quite controlled the way it was happening. And we had a good little run through here, I think, on a couple of stocks. And that comes down to your probability of your setups, your high probability setups, your cleaner setups, more bang for your buck setups that are coming off lows as the market's just chugging higher. Now, this is where the dynamics change on the ASX. Especially, you can see this through here. I'll draw it up. I hope I'm not dropping out there, by the way. Let me just refresh that. Yep, no, it's still coming along nicely. I'm just checking the stream, it's coming through okay. So this, to me, is where the dynamics change. It's got more to do with these red candles. All right, so you can see it was going quite nicely up here. And if you just held, basic trend line across the lows, every time it pulls back there, if you get a green candle, okay, it's probably going to react off there like it has the previous 4 or 5 times. You've got here, good rejection in here, and probably in that zone there too. That was where at the start, but you got it 1, 2, 3, at least 4 times when it reacted off that zone. So if you're trading that, looking for your maybe intraday, you can go into a lower time frame on a 30 or an hourly chart on the ASX to get a bit of a heads up when it's starting to react off that zone. And then just continuing to buy your setups. So you're using your ASX as a guide to getting into the overall market, into individual shares. Now, this is when it changed. You can see it trade up to the highs and boom, straight down. So at that stage, we were starting to look at it thinking it's more just being skeptical of this rally. And that's what I was, at that stage, you just think, okay, the dynamics have changed. The way it come off, especially that one day, that one big red candle, for me, it was a bit as a flag, as a heads up. Why did we do that? And then, of course, you get the next few days, it did trade down quite a bit. If I can clear this up, it did trade down through, and that's only a minor level, I know, but it did wash out that level. Now, that's not a good sign of strength. Okay, so you've got this little washout here, breaking that trend line up, a few of these things, and you go, okay, what's going to happen here? So at that stage, when we did push back up to the highs and it washed it out, yeah, that was sort of your minor double top after this little breakdown here, and that for me was a bit of a heads up to be a bit careful. If I can spit it out, a bit careful, take more caution, especially if you're going long. If you're going to go long up here, I would have just held off to see what happened. And of course, you got this big sell-off. So we had for me, I see that we had a lot of heads up of what's happening back then and what could have happened. Now that sell-off was quite severe. It took out a lot of levels, pretty much all that 2.5 months work, or probably more than that, 2.5 to 3 months of work by the bulls to press it back up. We took it out in one foul swoop, really, probably a week or two. And then it was this price action that was really led me to be a bit more cautious. We're actually trying to short in here. So we sold off there, lower, higher, and then boom, the rest is history. So that price action there is different to what we're seeing here, what we saw, especially back here. So at this stage, a couple of good red candles here. It didn't take out, and the key sort of starting point is where we didn't take it any severe, any good support, solid support level. So for me, the level is probably not so much here, but there's probably a few levels down. That was not really a key level at around 61. Just draw that clearer. That 61 level. It's not really a key support level. It was just a more, we'd had a pullback there. So on this trend up, it was a minor pullback, and then we pressed up. So you've also got this minor pullback just in here, which it did take out that level, but I think this is more the key level. You can see a couple of red candles. I had a green candle, and the market's trying to press back up. Pretty much a lower high in here before we pulled back. So that action's up, back, and then we started to lift from there. So that was for me, more of a key support level for this trend up. And so that was the anchor level. So we're looking at, we had our eyes really on that level there to see what was happening. And of course, when you get this type of price action, and then you get this minor, whippy sort of price action here, and it did come down and trade off 61, and then you got a couple of green candles again. It's not very bearish. You can see here, we just went bang. We had a couple of red days, a green candle, red day, another green candle there, positive day. So it was really indecisive for me. The MAs are still up, whereas this, we went straight through the MAs. So you can see, and then from the bottom, we reverted back to the MAs, which is more bearish. Touching on the MAs from the bottom side before we started, coming with some more selling pressure. So for me, this was more just reversion to the mean, and it was a heads up that okay, we are potentially stretched up here, but it doesn't mean that we can't clean out a few late buyers with some price action. It was more of a setup to the buyers that got in a bit late, that are going to be your first nervous traders into the index, into the market. They might have been buying it, say around here, just to say the end of Feb. They saw it rally up here right through Jan, another big rally up here. They might have got in sort of after this zone. Just draw that a bit better. Somewhere in here, buying in here. So they're the first ones that are going to come under a bit of pressure. They're going to be feeling a bit nervous if the market retraces on them. So if you're not on top of your price action, I'm not just spruiking the technicals, but if you haven't got a plan of attack, what's going to happen on the ASX, what you expect to see if you're bearish, what do you expect to see if you're bullish, and you haven't got that ability to change your mind and leave the ego on the sidelines, if you haven't got that ability to change your mind, you're going to get stuck either bearish or bullish. And bullish at the wrong time when the market sells off like that and you don't close out your positions, or um, bearish when the market just keeps kicking on and it keeps setting up to go long. It keeps cleaning out a few late buys, pumping back up to squeeze them out. Pull back, squeeze. So that's the price action we saw back in, was it March last year? This price action just in here, it was quite clean. A couple of red days. That was more indecisive. You kept seeing buyers stack up, push into the market. Especially that rejection. You can see this candle here, that rejection off the lows. Now that's not bearish at all, as opposed to back in September when we saw expansion lower. The market opened, sold off all day, closed on its lows. So you got 2 big days here. Now that was completely bearish. Coupling that with what the price action we saw in August, whereas this was still getting soaked up. There's still some buyers sitting on top of the MAs. It tried to chop up here. We've got a green candle that was rejected here. So at that stage, you're looking at it going, maybe that's a bit, that is starting to look a bit bearish, but we haven't broken any anchor. And the fact that the next day we sold off, we still hadn't broken any anchor. And then a couple of green candles, we were starting to reject that 6100 level. And then you got expansion back up on the 28th of March. So not saying that was everything to watch, but that price action that took place over the course of about a month was, for me, starting to look bullish. And even though I was starting to think the market's getting heavy, and we're still taking out this level here. If we're bearish, we really should have fallen over before taking out that level at, was it 62.34? This high. So we took it out about here, red day then, and that was the only reaction you got lower. So bulls were well and truly in control then. A couple of green days after that. So yeah, it's. I think what I'm trying to get to is just, I know some people I've spoken to in the past don't look at the overall markets and what's happening. They just purely look at the stocks. Yeah, that's all good. But I think to really maximize your trading and maximize your returns and a bit more proficient, you've got to take a global macro view as well. What's happening? How are we reacting to bullishness in the US? We're not doing anything. Why? Because of what's happened fundamentally in Australia, rates, miners, or commodities. What's the underlying? So if you've got all that macro picture, when to pull the trigger a bit more or when to hold off a bit more. And at this stage, it's not pulling the trigger. It's more of going into sort of protective mode or safeguard mode with your stops or with your trades or whatever's happening. Whereas this, until that played out when we got this little rally back up and through the previous high, then I don't think there's a need to go into safeguard mode just yet. And the last few days, end of last week, start of this week, we're looking good. So for me, that's a key high low. That's an inside high low. We popped through the highs here, with this little move up, pull back, inside high low, sitting straight on top of the MAs. So I still am expecting this to take out or at least test the highs at 63.70. Now we're not that far off, are we? In about say 100 points. And if the US keeps kicking along nicely and squeezing out through those highs, we could easily press up through that. So it'll be interesting to see, even though it is, on the weekly charts, we're still looking a bit heavy up here, but this is the time when a lot of people will close out and the market can get more energy just to keep edging higher, because everyone's trying to pick the top. Just the same as everyone's trying to pick the bottoms, pick the lows. It's just a habit we get into. But if you can clear yourself out of that habit of not trying to pick, trying to pick the bottom or trying to pick the top, and you're trying to take a chunk out of the move, a chunk out of these moves up here, a chunk in here, that to me is the best way to safeguard your portfolio or is to be profitable. Does that make sense here, guys? Or did I just get on a bit of a rant and went sideways there? But so I think here I'm happy just until this is a key level on the ASX for me, is just the lows around 61, 69. If we trade up through 6,300, which I expect, then you're just looking for the pullback and then getting a higher low and going on. Now, if we get some of this price action, we get through 63 and then start to topple over, then that's where we're going to have to start to look to be cautious and see what follows after that. But I think that we're so close to these highs, there's going to be people who are getting cautious. And I know from what I've read and what I've listened to, there's a few fundies that are sitting on the sidelines, a bit more in cash than what they normally are. So, you know, obviously they're a slower boat to turn, but they're still trying to pick the high. Similar type of thing. So it happens to the best of us. Sorry, just having a drink of coffee there. So now, just seeing what we got. We've got, oh, get over there. Still ticking along nicely. Worley's our short. It's, I'm a bit concerned that's not going to tip over just by this, touching on 14 and pop back up again. It is looking heavy. That's more of a hedge against the overall market capitulating. And at the moment, it doesn't look like we are. So I'm debating. I've tightened the stop right up, so we're not risking a lot on that. And if it does roll over, great. If it doesn't, we get stopped out. So be it. That was the hedge for the overall market going down potentially. DCG, what's it? Decimal group. It's not trading. It's very thin on today, but it has kicked on nicely. We've got our stop just above break even at the moment. Still debating on this one whether just to call it a day because it's not really doing anything. I don't like the way it's pressed up. The MA is on the weekly as stretched up here, so you would expect some potentially weekly selling to come through sooner or later. The daily is still looking okay, but we're still holding high lows on the daily, so that's still looking quite nice. Grange is our other. That gap down on what was that, Thursday? No, Friday, gap down and then bounce straight back up again. So positive move. Don't know why it gapped down. It's actually, I think it's a really good stock. And it's probably underperformed iron ore prices. Like you've got FMG and what's in MGX, Mankinson. They've done really well. Whereas this hasn't done quite well. But that weekly chart looks like hopefully it can get ahead of steam and tick on. Wouldn't mind locking in a partial exit soon, 50%. So probably was looking around the 35 mark. I know it did touch 35 on the 11th of April. No, it didn't. Yeah, it did touch 35. I didn't have a partial exit there. Just want to give this room to move because the fundamental story, believe it or not, I do read a bit. The fundamental story is good. And I think if this just chops around here, contracts and continues to hold inside higher levels, then I think it's going to take out 35 quite easily. I think it can have a good run. Just looking at that in the monthly chart, longer term charts, the weekly charts, all looking good. Cash on hand, good results, good drill. They're just doing everything. Everything's positive. Now, what was that one? Grange, CDA, going sideways. Tighten up the risk on this one. If it doesn't kick off soon, we might take a couple of cent loss on it, but we'll see. We'll see if this can kick on through that high at 317. It's just going to go a couple of cents higher from here. Then I think we're right. It should get through 320 and then trade up to sort of at 330 mark. But this we could be, and this is the biggest problem. The daily was looking good here. It's starting to trend high. You got this run up here, pull back. Inside level, we took a long one, took off, stopped dead at 330 and then pulled back. So it could be that this is still consolidating sideways on the weekly. So if it doesn't run on soon, then I'd expect that we're either going to get stopped out or close it out. But that's that one. That's Coden. Newcrest, Goldie. Good day today. Still bullish in my eyes. I like this price action. It's rallied up. That was back in 2016. Good pullback, but it's been holding inside level. It looked like it was curling over and started to lift again. At the end of last year, start of this year, it's still lifting. We're getting a bit heavy up towards the 27 mark, 27 bucks, $27 mark. But to me, it's still ticking along nicely. If we can just hold those higher lows in the weekly, the fact that we're rolling over stochastics to me is selling pressure coming in. It's getting soaked up. It's getting soaked up. So this sort of selling pressure that keeps coming in, it's getting soaked up by the buyers and pressing higher levels. So that's a good sign today that we're potentially going to go up through that, back up through 26 to attack the highs through 26.50. But again, we'll have to wait and see how it goes. If the market turns over and gold has a big day, big night, big rally, that's going to do well. We'll probably get caned on a few others, but we'll see. I think we've got an even balance, good quality setups, which are playing out okay, are holding up. A few that have done well. If the market takes a nosedive, we've got Worley and potentially Newcrest, and the others may get stopped out. They're the ones that are in profit anyway. VTG, they've come out with some good results, and they're starting to look like if we can just get up, even if we have that inside bar today, we hold 170, which it looks like it is. It did tick down through 170 just today, 169.5, and got bought straight back up again. So it's hovering around that 170 mark. If we can get up through the previous highs at 73, I think it is. Bang, I think that's going to take out the highs and trade through 180, and then we'll get a partial at 180, which we've got ready and raring to go. But the weekly, you can see that weekly is looking really good in my eyes. Big sell-off here. Keep holding that $1 mark, and we started to lift. So we've got the MAs crossing up, got a press higher, so perfect of what I normally look at. Pull back to the MAs on the weekly, starting to trend higher. So I think I'm expecting this to get a bit of a head of its steam sooner or later and kicking on. But that's it. That's all we got at the moment. If you've got any questions, shoot them through the chat. Otherwise, we'll kick off with what Lawrence just put up. You still on holidays, mate, or what are you up to? Just downing a bit more coffee. It's going before it goes cold. All right. Come over here. So PPE. PPE looks good. Anyone that doesn't know, the way I view these MACD is more of a momentum thing. So ideally what I'm always trying to do is get the momentum, whether it's a big move, a small move, but you're just trying to follow the stock, and that's all we're trying to do. When momentum's starting to pick up, we're starting to look at, say, here's Prime back in July last year, pressed up, pull back to the MAs. You're trying to get the momentum when it's starting to rally again and get the part of this leg up, see how far you can run it. We start to go in that, we call this a complex correction. We get lower highs, lower lows, and we take out the anchor. PPE, I'm going to have to remember that one. Sorry, I'm just going to quickly write this down. Only because it's a good talking point. So complex correction is, just draw that, here we go. So the market's pressed up, pull back, pressed up. So this is one leg up. Actually, it goes back, it goes up to here. Before we start to get that lower highs, a clear level through here, we start to, break. So as soon as you break, that's a complex correction. We're getting lower highs and lower lows, pressing in all the way down. So that's all part of what we call the complex correction of this move up. Okay. Probably here's a little one there. So you can see that the bigger moves in yellow, and say the daily move could be in blue, where it's correcting here, and then you get started a new leg up here. All right. So what I'm always trying to look for those zones for a new after a complex correction, or that could just be a weekly pullback. I'm looking down to my daily. It's a daily complex correction. I'm going to get everyone's confused, I'm guessing, but you can see what I'm talking about. So if this is your bigger move, and we're getting, something like this, we get up here, then we correct lower, and then we just do this. So I'm looking somewhere on the blue after we corrected here, looking for when it's starting to pick up here. Not too much just in this zone. You can see it was better way back here on this move. It was a bit cleaner. You can see a clear level through. It was about $1.65. Started to press higher, even a clear level through here. Actually, I'll take that again. You can see that was a good little setup here. So you're buying with the trend. You're buying when the market's going up, both on the weekly and the daily. You've had your correction just to clean out a few buyers. If you can get in here somewhere and I'll set up, beautiful. Here was probably a bit tougher because there's nothing really that I saw it set up cleanly. But that's what we're always trying to do. When it's starting to rally again, you're starting to get the market. If this had pressed up, pulled back to the MAs instead and gone up, great. Then that would have been a nice setup there. But unless it was just sort of kicked on without really having a pullback. But you can see what I'm talking about, where we're trying to really get involved in the action. Now, what's happening at the moment is you've got, the good thing is we're seeing 1, 2. I don't mind that secondary move down. All right, so that's the depth of pullback. It doesn't have to be over a certain amount of time, but the actual depth of the pullback was quite handy. And it's cleaned out with that pullback's probably about 50% of that move, of this move up here. It traded down. It was probably about 210 from 270, 60 cents. Oh no, it's not. It's more than that, isn't it? Somewhere around 170 to 210. It's 40 cents from about a 60 cent. Yeah, so it's just over 50% pullback. So that's a deep correction. So if I'm bullish on this one, I'd ideally clear all this out. If I want to, take action on this, it's more. That's a key level here for me. I'd ideally like to see. I mean, I know you might be looking at that. If you bought it through here, okay, fair enough. And then you just want to see it hold that trend up. If it breaks through that 245, you could probably have your stop at 230. See if you can press up to the highs at 270, or see where it goes to from there. But either way, it looks like it's coming out the other end of correction, unless, of course, this is what we're looking at. And then you've got a bigger sort of corrective action. So we've had up, these two moves down, we've come back up here. Whether or not we're going to start to see, this action here, holding a key high level, and it's just to squeeze out a few more of these buys, potentially squeeze out a few more buys, or start to drag into someone else that's looking a bit more confident. Does that make sense? So if we can get this pullback here, potentially down on 225, and then just sort of build some inside high lows, then great, that could be a cracker. See what the weekly's saying. There's not much work on the weekly, people infrastructure. Let me just go back to see what the volume's saying. So the volume's not doing too much at all, but it really doesn't do too much anyway. Right, next one. Net wealth. You can see that's starting to curve up. This pullback in here, was it mid-March, end of March? Good on the stochastics, good pullback to the zero line. So that's always like you see a crossover from selling to buying on the MACD, pulls back to the zero line, starts to get that momentum back up again. Selling pressure's taken it from overbought to oversold down here, and it's a higher level than it was last time. It was oversold back in start of Feb. Back in here, started to lift. Good selling pressure, but the buyers are soaking up any sort of selling pressure. They're soaking up, and that's built a high low, so it's starting to go back up. Problem is, we had that secondary leg could have just taken us up to the highs. The previous highs are around $9.50 to $10. Are we going to start fading there, or are we going to start holding potentially like another higher low here? Stochastics are looking good. The actual pullback, getting soaked up here, is starting to look good as well. I would like, for me personally, just a couple of more days of just hovering around this level and seeing that buying starting to stack up, a bit more volume come in, and see if that can take us up and through the highs at 9.35, potentially up to 10 and through 10. Go to the weekly. Weeklies could just be going sideways here at the moment. So the fact that it has broken through a few key levels, I'll just draw them up. So that you've got some good levels through here. You can see this push up here. That's a consolidation holding an inside high low, and we got that press up. You've got some support levels there. You see these moves. I'll take that 1, 2. It didn't really get through the lows very much. You can see this move didn't get through the previous low here by very much. This move too didn't get through the lows by very much. So that is, in a way, bullish, but you want to see if this can kick on with it. And I wouldn't mind seeing from here on that pullback, just an inside level. Probably drawn it too small. That's your rally up here. Pullback. If we can just get some inside levels like that over a few days, I'll be a bit more confident on that. Be a bit more confident to take that on an inside break, knowing that you're going to front run a break of say 925, 930, 940, being this high up here. You front run that, so you're taking small risk on it when the market's heading higher, looking positive, and just see if you can kick on with it. So that's ideally what I'd be looking for up here on NWL. Let's go back to here. NWL, what else you got? BOC, haven't looked at it. It's looking positive still. It's more, this weekly potentially is heavy. You can see the weekly volumes come off the start of this year. It hasn't got as much volume it's had, so maybe I mean, the weekly's still sitting on top of the MA. It just, if we can drill down on that, it hasn't kicked on like I thought it might from the daily. You can see this volume's really decreased, pull back. If it gets through $4, your volume could really lift, take out this high, yeah, at 389, and push through 4, and then you're going to start attacking to those highs at 485, potentially $5, and just see where it goes to from there. It is potentially, it's just going to be heavy because of what's happened. It's burnt a lot of people from 2016, that push down from above say around 950 down to close to $2. So it took a massive drop. It's burnt a lot of people, and it's been spending a lot of a year and a half or nearly 2 years rebuilding, resetting itself. So we'll just see if this can continue. But either way, that's starting to look okay. I just, lacking the volume this month is not leaving me with too much confidence. I just think this could be a harder one to trade. That's why I did send it out as an alert a while ago, but haven't followed up too much with it because nothing really played out that I liked. IRE, IRI, integrated research. Not a big fan of just the recent price action on the daily, but not so much on the weekly either. Don't know what they do. Things I don't like on the, this is where I start to use MACDs a bit. What's happened to momentum is it's starting to ease, and why could be starting to ease up here. Just draw that a bit better. Ease here, you can see it's coming back to the zero line, so that could potentially roll over. Momentum start to the downside again. Sellers are still coming in, but it is holding. We are getting on the weekly, it's potentially holding there. It's just, you've got a wick here, rejection here, up towards sort of that $2.75 to $3 mark. It's rejected there. So if it's starting to get heavy on the daily, I'd potentially just steer clear of this, or it could even be a short. I just don't like the way it's got smashed down here. It was good the start of the year. It's rallied quite hard, straight back to 275, but I'd be looking for a bit more work. I'd ideally look for it to see break up, up here, and look for something where it can give us a chance to get in when it's sitting on top of the MAs. And then that could take up, up to $4 and so on. That would be a lot more bullish for me, but that's your weekly. Just looking down to the daily, and the fact that what I also don't like is you're drilling that price action, the fact that it's pressed up. That was a good rally up, start of the year, I think. Yeah, start of the year. Don't like the rejection there. Sell-off, had to pull back to a deeper level. Just draw that up. So it's pulled back to a deeper level here under that previous high low. Previous high low here. It's couldn't get through the highs. Took out that high. Whoops, that's a bit clearer. Took out that high, pulled back, failed. We get this sort of slight move up, and then boom, we come straight back down and took out this level again. Pretty much the same level, 235. It has, I know it's popped back up, but are we getting that the way it rejected yesterday? Is that rejection going to roll over from here, or we're going to look bullish? At the moment, all this price action pretty much a good part of the year has just been sideways. So it's consolidating sideways. I'd be inclined to just let it go, because if we buy it even through that high or through this high, we're not buying it on the rise. It could just be another washout. You can see it's done at 1, 2, does it on the downside 2, is here. Here's another washout, this previous high. Here, big rejection. So it does it time and time again. So I'd ideally like to see when it's rallying, pull back to the MAs. When the MAs are starting to spread up means this is the reverse. This is starting to spread down here. Contracting up here, starting to spread. Excuse me. Does that make sense? So I'll just be sitting on the sidelines just a bit with this one. And that's the problem at the moment. There's not a heap around to get excited about. That looks a bit better, IEL. I mean, it is sat on top of the MAs, consolidated through here a good part of 2 months. Good part of the year, eh? About, about 2 months consolidated sideways, starting to lift. So this one, I mean, even if you're buying here, your stops can obviously be below these lows at these lows 14.39. Stop low here, see if you can take out 16. Away you go. If not, the weekly's still looking pretty good. The way it's consolidated sideways here, and you had a good week last week. I know it's a bit red this week, but we'll see how that one plays out. It's good volume on this rally here, good volume through here, good volume through here. So every time it's rallied, it's good volume. We've had a contraction here, or that sort of complex correction we talked about. That pullback on lighter volume, when it's starting to rally, good volume again in here. So that's a good sign. If we just get a little pickup in volume, then great. MACD looks in a good position, a bit extended on the upside up here. So if we can get a setup from here, wouldn't be too bad. I think out of the ones you've put up so far, it looks pretty good. RHC. RHC, I think it's so look at, this is the weekly. This is how I'm viewing the weekly. If we just get that a bit bigger. All right. RHC. This is the weekly that I've got my eye on. FLM will do that. No worries, Pete. So that's your uptrend. Your key level in the weekly is through here. So you've just gone with this move down, you've contracted, but the fact is it did it in quite a few stages. It wasn't just the fear and just boom, straight through. Like on the ASX when it went straight through a level and then consolidated back up to it. Well, if you can understand what that pattern's meant to be. We didn't do that. Instead, we've contracted into it, like this type of thing, contracted into it. So it's quite a bit of buying on the way down, loading up until we got actually through that level. Would have cleaned out a few buys that anyone that sort of bought it on this move up from back in 2016. I know we're on the weekly, it's a big time frame, but cleaned out a few people, started to lift here. Still have to be careful, but I think what I don't mind is this. So I think maybe for me, sort of early days, just at the moment, the fact that we pressed up through and it seems to be changing the tide a bit or changing its tune a bit. So these moves up, and when MA is crossed, it's rolled over. Okay, so that's your pivot level. It's starting to head south, but this move up has taken it up, potentially out of contraction. So with this move up, that's here. I'd ideally be looking for, a couple of legs down and then start to get a high low to work from on the weekly if we can get that. So, I mean, in saying all that though, it could just keep going. I mean, it has broken up and out, so we could be continuing. So if you wanted to be a bit more aggressive from the daily chart, potentially, which is not exactly my style of trading, because I'm always skeptical that things just going to keep going, especially in this sort of current market. For me, the daily, you'd want them to be seen at even breaking through a straight line. Oh, no, I'll get it right. That sort of level in there. Can you see that clearer? And that's around, so it's just below 65 bucks. If we can break up, so you're getting this sort of contraction in price, you've got it lifted, pulled back, lifted through the highs, and then you're getting this contraction in price. If we can get through that high, then potentially look for your high low to work from. Something like that, because then you know that it's starting to come out of contraction, it's starting to rise, and you're going to get that initial thrust up. I mean, if you miss it, you miss it. That's okay. You can miss things. That's not a bad thing. But if you get that kind of high low holding, then it shows you an entry, then grab into it or jump into it potentially. Because that contraction, you've still got high low, so there's still buying strength and there's a bit of selling strength. So until they decide who's going to win out, once you break up and out of that contraction, then once you break up and you've got this high low starting to build, we know that the bulls on the charge, they're going to start the pressure of the bears, and anyone that was looking at selling it is potentially, new shorts going to be holding off. Anyone that's bought it probably going to close out, and that's where you get the selling pressure from, is stepping aside because it looks bullish, and then seeing how far it goes. Okay, so that's the way I'd be viewing that. And that weekly, I mean, if that plays out, that weekly is just going to kick on and you get through the, I would expect it to get through the highs at 65.88 and start attacking up towards $70. We'll see how that goes. So that's that. So I've got through yours there. A2M. Oh, I hate looking at A2M because I'll be kicking myself. And why wasn't that shown? There you go. You don't even need to say much about that. That's bullish. It's where it's going to more than anything. So if you manage to get into this, Gary, great. If you did, awesome. If you've been in for a while, awesome. That weekly chart, the beauty of this, look at it. It's on the bigger time frames. I'll make it a bit better. On the bigger time frames, this is the way I would assess it. I mean, everything's looking like it could have a lot more left into it. I know we're up at what, $15, but you can see through here, sort of spent some time consolidating before pressing up and out of that consolidation. And that was after a small rally higher. So if this is the leg up without really a pullback, and you take it sort of from lows to highs, say $2 up to around 14, that's a $12 rally. This is the sort of the first sign of we had of some sort of corrective action just to clean out a few of these late buys. It essentially pulled back to, what was that, $8, and then started to lift again. So if you're projecting that up, what did I say, $2 to 14, $12, add that to, was it $20 a share potentially. So we're only at 15, about $15 a share. So this on the weekly time frame could just continue to go. It looks like it's going to go a little bit more vertical here, but remember what happened back here could just go boom, take out, from 15 to 20 in one foul swoop and just take off. High low on the weekly is just below, was it $13 a share? So if we go back to the daily, just remembering we could have potentially a leg up to the week on the weekly. Things are looking good. Momentum's up. Stochastics can hover around overbought for as long as it wants. That's fine with me. Go to the daily. We're just coming off. I like the fact that it's pulled back to the zero line in the MACD and it's starting to lift again. So momentum's starting to pick up to the upside. Probably the last 3 days have provided that momentum shift. And what are we doing on the volume? The volume has been fairly consistent. It's probably a little bit lower, and you'd expect it as we start to get higher and higher, that volume to keep pushing it is going to get lighter and lighter. And there's going to be a time when someone's going to unload on it, you would expect. But for now, if we're projecting up towards $20, there's no reason to keep holding it. So the last couple of days too, that volume's picked up today and yesterday. 3 million shares, just under 4 million yesterday. We've done about just a touch under 4 million now. It's a bit more volume than yesterday, but it looks at it so far. So yeah, I mean that's pretty good. I think there's no, that's going up. Not much to say about that, is there? I hope that helped, Gary. If you've got that, if you're long, great. If you're not long, I wouldn't be jumping in just up here unless you're happy to put your risk below. I think after those couple of extension days, you might get even if you get some sideways action, and then you look for a break up again, good. Let the MAs catch up rather than a pullback to the MAs. So what I mean by that, this is a rally. If you just let, this is sort of what we expect. That's where your MAs will catch up and then potentially look for a break up rather than the market's pressed up and then it starts to pull back to the MAs and then consolidate and then go. Ideally, this is better. You get a better price, but either way, you want to confirm what's happening before you're looking to enter. And then, of course, at these sort of levels, I mean, it's good, some good upside. It could easily be 2 or 3 to 1 if we're right. But if not, you want tight risk on it too because it has, gone quite hard. FLN, actually good. And you can see that not a lot of volume. This little run up had some good volume and then got sold straight into again. So with some good volume too, you can see. So ideally, there's not much bullish volume coming in just yet, but it's more on the weekly. The weekly and the fact that we could be just sitting on top of these MAs. If we start to pick up here, even go through high of 76.5, so you had a buy stop at 77. It's an inside level. it's holding higher lows. It's confirming that it's potentially going to hold those high lows and continue. If you get an entry through there with your risk just below, I don't know, 66, around 66, you're not risking too much. The potential it's going to jam through 85 and even potentially those highs at 90. I think it's a good risk reward trade. And your stochastics are in a good zone. I mean, you can easily pick up. It could just start to take off. I mean, if you get that rally through that level, 77, with a bit of volume, you know that there's a few more people looking at it. Does that make sense there, Pete? So yeah, it's this weekly chart is what I like, and I guess you can see pretty clearly. The things I like, the fact that it's coming back to us, this move up, it's pressing back down to the zero line on the MACD. We've gone from overbought to oversold through here, and we're at a higher level than we were previously. You know, all these these levels here, every time, you know, on the stochastics we were rallying, had a pullback, we're at a higher level here, and it's taken some good pressure to get us only down that far, and we're still potentially holding that higher level, that higher low. So for me, it's worth actually keeping a close eye on this one, because this is potentially what I like. You know, got a rally up here, move back down. We're looking for another rally, potentially through a dollar easy, and then from there, I mean, who knows? We could be looking towards, just trying to pick out some levels. You know, we could be looking up towards $1.80. It's nothing to say we're not. But yeah, that weekly, it's more about that sort of contraction. You can see a contraction in price. It comes at a point. So when you can see that, especially on the weekly, and the fact it's being sold down here, down to sort of those low, you know, 30 to 40 cent zone, that support through here before it started to lift again, and the MAs are up. It's showing some good signs. You know, good volume. Good volume in here, although that wasn't too handy. Yeah, a bit of volume in here, but when it rallied, got some good volume through here. Bit of a rally off, you know, supporting, well, bit of a pop there was supported some good volume. So I like that weekly chart, like the potential in the weekly chart. I don't see an entry just yet, but look, ideally, even taking it through 77, I think it's probably going to be a bit tough, because I'll show you. I just what I'm looking at. So I've got to be excited then. I think this is, you know, the move. So that's sort of the contraction we're looking at. Even if you take a step back and it goes from, you know, here, that's still the contraction. So we haven't got a decisive move either way. So if you take it here, for example, take the entry, it could stop just above 80, remain in this contraction, and then, you know, pop up and then go straight back down again. Maybe it won't stop you out, but from there, we're not confirmed. The bulls, it could easily, then the bears start taking control. You push through 65, and then you got stopped out because you haven't got confirmation who's going to win out just yet. Ideally, you do when you get through 85, or you know, there's this high up here, and I think that's probably the key level to knowing when who's taking control and who's going to press it higher. And if that weekly chart's going to start to take control, if you get up through here, then great. And I think it's the first thing you'd be looking for: push up, pull back, looking to enter somewhere on that pullback. And this I see as a beautiful little entry. You can see back to the MAs, and that was quite clean compared to this one, because it just broken through that level. You know, only slightly. I'd say it's probably about a cent or two. And go back to check that high 61. They got to 62. So it broke through a cent, pulled back to the MAs. That zone there, a cracker. And you can see what happened just after that. So what it's done, the market has, get back. You've had this, you know, one leg lower high. You can see that. So just look at the price action too. This is probably a great, I'm going to write this down too, by the way, a great one to talk about. You'll probably be hearing this tomorrow night, Pete, as well. You can see that the market's pressed down. You've got this sort of grind up, which is heads up that potentially there's a bit of another move lower. And you got that, you got this press lower. So that was sort of that pop up, two legs lower that we like to see, still holding high level, and then up we go again. And then once you get that two legs lower, then we're starting to see what's happening. The MAs are starting to rally. You've got this break just here, you know, that break just there, and we're starting to lift. I'm wondering if you can see that clear enough. But I'm hoping that makes sense. You see what I'm saying on that one? Hopefully so. Anyway, so that was, for me, that would have been a prime entry. You can see what happened after that. You're not put under any pressure whatsoever. You went from, breaking through 60. If you bought it, say around 60, you got up to 90. I'd say a 50% gainer on that trade before potentially you either took some off or you got stopped out. Potentially just drop back here. You've taken some off with that move. But either way, I think that was a great one. And it's a good one to educate yourself on the price action, what's happening. See the intricacies of the price action and what's happening. Whereas here, I just think we've got to be careful that if you bought it through there, you could just get stopped in the shop. You may be fine. It might break up. You get stopped in. You got your stop below 70 at 66. It never tags it. It just spends time continuing to contract, through here. It continues to do that before it starts picking its direction and breaking out. But there's the opportunity that it doesn't break out and it rolls over. But I'm leaning towards I'm biased up on this one because of that weekly chart. I think that weekly chart looks kind of good. So yeah, we'll be keep an eye on that one. I just want to see that volume increase. It's got some volume there, so about 10 grand on the offer. Next level about 10, just over 10. Next level is about 20 grand, closer to 20 grand at 75. So a bit of volume if you need it. And I expect if that starts to kick off, the volume's going to come in a bit better. All right, guys, we'll probably call it a day there. Thanks very much for joining me. Sorry again that it didn't. We didn't get to talk yesterday, but yeah, we got it done today. I think next week, just bear in mind it's a holiday Monday, so we'll probably do the same thing. Probably talk on Tuesday at 12:30 again, because Monday the market's closed anyway. So, and it's a shortened week. What do we got today? Tuesday, 2 more days, then a long weekend, and back on. Actually, it's only a 3-day week. I think next week. I'll have to check. Oh, it's a public holiday here on the Thursday or Friday next week after Easter. But it could be the ASX is open, so it could be a 4-day week next week as well. So yeah, thanks for joining me, guys. Have a good week. Have a good Easter if I don't speak to you. And we'll look forward to speaking to you again on Monday next week. And Pete, see you tomorrow night. Thanks, mate. See you later, guys. Enjoy. Bye.